Hi everyone, welcome. My name is Pa Lor and I'm the Financial Coaching Coordinator here at Twin Cities Habitat. Today we'll be talking about debt, how to pay debt strategically, and kind of just understanding the types of debt so you can figure out your game plan. So understanding debt, there's differences in debt where, there are some debt where there's collateral, where you have physical property that could be sold. Other debt where there's no collateral and you just borrow the money and you have to pay it back. In addition, there's some differences in some debt where you're able to deduct some of the interest that you pay towards that loan on your taxes, on your tax returns. So the biggest ones are like student loans or mortgages. Any interest that you pay on those two types of loans, you can deduct at the end of the year on your tax returns. So there should be some small tax savings for you. Whereas other debts such as auto loans or credit card, any interest that you paid there, you're not really able to deduct back. So knowing kind of what type of debt it is and what you're able to deduct and what possibilities there are will kind of help you determine if it's something that you save for or if it's something that you borrow for. And it will help you to kind of prioritize what debt do you really focus on paying intensely down, whereas with other debt, it's okay for you to just kind of go diligently, slowly paying at it. So for example, I talked a little bit about the good debt, I guess, in a sense, and then not so good debt. So we have, a home where it's a physical property that it could be sold, but with a home, it appreciates in value over time, and so it's something that will benefit you because the value will grow over time. Whereas with an auto or a vehicle, it's also a tangible asset that can be sold. However, vehicles usually depreciate over time, and so the value of that property is decreasing over time, so you're not really benefiting from having that property. So we talked a little bit about the types of debt and kind of assessing whether it's something that you might want to save for or borrow for. Now let's talk about different ways that you can pay off debt that you have. So two methods that I'm going to share with you are the Snowball Method and then the interest, I call it the interest method. So the Snowball Method, it's pretty popular. Most people may have heard of this method already, but it's where you pay off the smallest balance account first, and then you apply whatever payment you're making there to the next largest account that you have. So for example, if I'm paying $100 a month for a credit card, I finish paying my balance on that credit card, now I take that 100 and I apply it to the next highest account that I have. So it's kind of like the snowball where it starts out small, you tackle the small balances, and then it kind of grows over time. So some people like this method because there's that psychological thrill to it, that sense of accomplishment where you've knocked off, you physically see the number of accounts that you owe going down over time. And so that might be something that will motivate you and drive you forward and keep paying that debt. Another method is paying the highest interest accounts first. So some people are more logical where things have to make sense, and it's like it doesn't make sense for me to pay and put off this account where I'm being charged maybe a 22% interest rate, where my monthly payment barely offsets the interest that I'm being charged on the account. And so it might make more sense for someone like that to focus on paying the accounts based on the interest rates. It may not be as successful for some people because you may be working at paying off that account for a really long time, and so you don't really have that sense of accomplishment where you're seeing the actual accounts that you owe going down, but you still see the balance decrease over time. So it really comes down to knowing yourself, knowing what will work for you, what will motivate you, and kind of using that to figure out a game plan of how you want to tackle and approach your debt. So as a recap, just understanding the types of debt that are out there and will help you to know if it's something that you borrow for or something that you save for. And knowing that interest on some types of debt can be deducted on your taxes. So consult with a tax advisor to get the best savings there. And big thing I think is just self-awareness is key when paying off debt. So knowing what motivates you, what your challenges are, what you need help with, what you struggle with will really help you to make sure that you're consistently going at paying off debt that you owe. But I think the big thing is just keep paying at it, but knowing what will motivate you to go further and beyond at getting that debt tackled. So thanks for watching. If you like this video, please be sure to like, comment, or subscribe. And for more first-time homebuyer tips, visit our website at home.tchabitat.org.